For most of my career, silver wasn't even over $30. And it's moved from 50 to 120 since Thanksgiving. Samsung spent $175 million in a Mexican silver mine. Why didn't just go to the LBMA? Well, the LBMA didn't have enough silver for them. It's the last time, 3 times we've had a red hot precious metals market. We've had extreme problems in the US, and we haven't had those yet here. It's been weird about this whole run that's
All right, and welcome back to the Rice Report, everybody. Eric Rice here, your host. As always, we try to bring you information about money, politics, and religion, the 3 things you should never talk about. If you like what we do here, totally free operation here. There's no ads, no nothing, all across the board, except for Rumble. They run ads even without our permission. But if you like what we're doing here, please to share and repost and like and all that kind of stuff. I get told to say that a lot. It doesn't matter that much to me, but I certainly would want people to hear the conversations we're having because I think they're very balanced. I think that we're bringing in people with multiple different points of view. I don't agree with everything people say on here. And you can have good conversations with people and not agree with them and provide education to the world from 2 different points of view, which will help people discern reality in the world that they live in. And I think that's a very valuable tool. So today we are in the middle of the most volatile moves in all of precious metals history. And the precious metals market by itself, the thing I loved about it, and still love about it if it comes back, is how boring it is. It's a very predictive market. You can buy gold or silver and make your 4 to 8% per year. You don't have to worry a whole lot about losing money. And that was really kind of the premise behind precious metals, why I got into them. And, for those of you who don't know, my entire portfolio is gold, silver, Bitcoin, raw land, and oil and gas. That's all I own. I don't own any stocks. I don't own any of that stuff. This is an area of particular concern for us right now. And I use the word concern, but I don't know if it's actually that concerning, which is why we brought Dana Samuelson on here today, the president of American Gold Exchange, to talk about the volatility in the existing metals market right now. Because Dana, this is not normal. You do not normally see these wide divergences in the chart of just up, down, left, right, BA, select, start. If you know what that is, put it in the comments because you're my age and you'll remember that. But Dana, what is going on in this crazy market?
Oh, Eric, it's been a very wild ride the last week or so. We've had just a parabolic run higher that probably just got a little too much too fast. A lot of speculators piled in. And then we hit a cracking point last Thursday in the New York market. That would have been January 29th. We had a bit of a stock sell down. And precious metals tend to sell off with stocks because they create a liquidity event in New York. So traders move to cash because they get margin calls. The market's firmed up a bit, and then we went into Asian trading Friday, would have been while we were asleep Friday night, and the market started to sell off in Asia, which was unusual because up to this point in time, you could see the Asian market buy the market up and then the New York market sell it down a little bit. But when Asia started selling Friday night, we saw the metals come down to, gold a couple $100 from 656 and a quarter down to 5,400, 5,300. That continued into the London session. And then when New York opened up, it just turned into a real bloodbath with just everybody heading for the exit doors at the same time. No circuit breakers were deployed on the Comex exchange, which was unusual. And the Comex exchange has now announced that they're raising margins again. For gold and silver. Silver contracts are 15%. I think gold is up to 9% now, which means to hold the same contract, you've got to put more money into the kitty. And this is to handle extra volatility. And we've certainly had a lot of volatility in the last 2-3 trading sessions. And this is unusual in that it's just an enormous scale of volume of trading price fluctuation. I think gold had about an $800 price fluctuation on Friday, silver $30. For most of my career, silver wasn't even over $30, right? And it's moved from 50 to 120 since Thanksgiving. So that shows you the scope of the move higher and now the move lower. And all we've really done is given back, some of the gains that we've made just in the last month or two. That's really all it is.
That's it. Yeah.
Yeah, so I would call this a correction, a violent correction, a bit larger than normal, but we've never started from these lofty levels either, where gold was 5,600, silver 120, platinum got up to 29 and a quarter, and even palladium got up to 2,200. So all metals have surged sharply especially in the last 12 months. Silver's up over 200%. Gold was up, I think, about 75% at one point in time. Keeping the numbers in my head is getting a little harder right now.
They're getting bigger. The numbers just keep getting bigger.
Yeah, but we're starting to find support as it's Monday now. We sold off a little bit further last night in Asia when we reopened after everybody had a chance to think about the sell-off over the weekend. We sold down silver down to about $70. It's about 81 right now, so it's firming up. Gold got as low as 4,400, and it's right at 4,700 now. So we're starting to see some support kick in, volatility lessen, and some stability return to the markets.
To put these numbers into perspective, 2 years ago, gold was trading less than 2,000. Silver was around $23. So when you're talking about $4,600 and $82, these are really, really steep run-ups. And I think the general consensus out there is that there is a currency debasement happening. People are flooding towards debasement hedges. And in that hedge market right now, there's nothing older and more stable than gold and silver. Platinum, I own some platinum. I'm through the roof as to what happened with my little stash of platinum. But it brings up great questions, right? So long-standing issuance of paper gold, paper silver, paper platinum, these are causing some sort of a disruption in the markets. I don't think we can overlook the fact that there may not be enough supply for the contracts that are out there. I mean, theoretically, there's definitely not enough supply for the contracts that are out there. I want to get your thoughts on that.
Yeah, the Comex market and the London Bullion Market Association in particular, they trade multiples of the amount of ounces that actually underlie the markets. Now that's, the Comex market is a hedging market, and 9 out of 10 contracts or 95 out of 100 contracts that get bought never get delivered. And It's the same thing for being sold. We hedge our inventory, in the Comex exchange futures markets. We take ounces in, we sell them on the futures market. And when we sell them physically, we buy them back in the futures market. That helps to mitigate price volatility like we're seeing in the markets right now. So that's normal, but we're seeing a lot of deliveries on the Comex exchange, much more than normal, as there's been a lot of physical deliveries taken. And of course, the London Bullion Market Association got into trouble last October when they were overrun with buyers and didn't have enough physical silver to cover the trades that were executed. Lease rates spiked sharply. Deliveries were pushed out, 4-6 weeks. It was a crazy time. And that shows you how fragile the physical system can be at times when demand is overwhelming. And there's so much wealth in the world today: paper, money, wealth, stocks, bonds, currencies. The precious metals markets are small. And I think what we're seeing is this repricing is the market realizing that, they can just print more money whenever they want to, but you just can't print gold or silver. And there has been a growing lack of trust in the U.S. over the last year due to President Trump's, stomping around the world, deploying tariffs. A bit herky-jerky. I'm not real thrilled with the way he's done it. I know what he's trying to accomplish, and I think his goals are very admirable, and he's certainly one of the only presidents who would even try this stuff that he's trying to help get our finances in order. But it's created some uncertainty, some distrust. And in the last 6 months, we've literally seen what I've labeled a run on the bank of physical gold and silver around the world by buyers around the globe. Asia, China, Japan, India has been buying silver like crazy. Europe, Australia. It's not a U.S.-centric phenomenon because we don't have a precious metals culture in our country like most other countries do. If you had your currency fail at some point in time, or if you've had war on your shores, you have a precious metals culture because gold and silver save you when those really risk-averse, risk-on items happen. We've never had war on our shores, and we've got the world's reserve currency, which insulates us to a degree from some of the currency shocks that everyone else gets in commodity pricing. Plus, I think there's been you see it in all the metals markets, there's been a general underinvestment by industry over the last 10 or 20 years.
Oh, big time.
So when there's a run on metals, the ability to supply new metals is hampered. and they can't bring new metal to market fast. It's a long, laborious, ecologically unfriendly process to mine these, whatever it is, copper, zinc, lithium, precious metals. So when demand ramps up, you see price runs like this because there's just not enough right now available in the immediate market sometimes.
And there's plenty. They're finding plenty. There's huge gold reserves that are being found around the world right now, and those require intensive energy. That's another component to it, is intensive amounts of energy to be able to mine those things. Which, from the Bitcoin perspective, Bitcoin is derived from energy. So is gold and silver. They're both energy tokens from that perspective. One's physical, one's digital. That's the only difference. But Dana, the overall consensus in the market is so skewed, right? So there are different opinions that exist out there. Number one is a collapse of the paper market, which I think is probably inevitable. I'm not an expert on that, so I don't try to talk on it, because all paper markets collapse, right? When you're writing thousands of contracts against the same ounce of gold and everyone calls that gold at the same time, that's just what happens. Will people call all that gold physically at the same time? I don't know. But you're certainly explaining to us right now that this is not a U.S.-centric issue. It's becoming that way. I think a lot more people are looking for safe haven for their savings right now, and I think you're seeing a lot more Americans finally turning, to gold and silver, and in some cases Bitcoin. But you're certainly seeing the gold and silver flood. You're seeing that happen.
Yes,
unexpectedly.
Yeah, Americans have been late to the buying into this rally. I don't think many Americans trusted it at first. Why? Because the economy's been doing fairly well. Stocks have been doing well. Inflation's been coming down. President Trump,
the economy's been doing well based on a GDP measure. When you look at Wall Street's doing great. When you look at Main Street, that's a bifurcation. There are serious problems happening on Main Street.
Oh, I agree with you completely. We have that K-shaped economy where the lower half of the economy has been decimated by the inflation we've seen over the last 4 years, which is what, cumulatively 27, 28%. I buy the groceries for our family. I know. I spend the money in the grocery store.
Yeah, some people are getting rid of the K-shaped analogy and calling it a lowercase I, where you're either part of the line or the dot. That's kind of where a K-shape ends up, and I think that's a scary environment. And right now, it seems to be unstoppable or inevitable at this juncture. But we never know how it turns out. But why are Americans? Always talk about, I live in Texas. We have a ton of Indian people here, and all these Indian people own gold. I mean, that's what they give as gifts. The Indian culture is very, very attuned to that. Chinese as well. I mean, they're the largest miner of gold in the world, and they're also potentially the largest holder. We have no idea. Like, Dana, anything coming out of China is a grain of salt at best. We have no clue. Like last month, they said we only bought 1 metric ton. We know that that's not true. They're certainly stacking more gold than that. But the American rush to this, I have seen it, and it's causing problems. And you deal in this market. You deal with people buying and selling gold every day. So I want to get this information out there. I see all the time posts of people who generally have an agenda, right? So like I fall in the middle, and you see people who are like, full on Bitcoin, don't have any gold, and they'll put a post out saying, my brother tried to sell his gold and no one would buy it. Or if they bought it, it was a 40% discount or 20% discount, to spot, which does happen. Like there are definitely, shady brokers out there who do this, but it's not common practice. I mean, I sold some gold and silver a couple of weeks ago. I paid 1.5% I got 1.5% under spot. I got paid on location. I moved on with my day. It took about 15 minutes. Now I had to carry a gun and a big heavy bag of metals around with me. That's kind of the big difference between it. But when you're looking at it from this perspective, what is the reality on the street? I mean, let me preface this by saying that like you're a very reputable gold and silver dealer. That doesn't mean everyone's like you. There are certainly shady dealers out there who will use market fluctuations to rip you off. That is a fact of human life. But in general, the licensed and bonded guys with great track records, are you stopping buying gold from people? Will you turn them away or charge them 25% as we speak?
No, we'll do business with everyone that we can. We have a fiduciary responsibility in our minds to our clients first. So if our clients want to sell to us, or someone over the street wants to come in over the counter and sell to us off the street, we take our client first if we have a time constraint, or we have a cash flow constraint. And remember, metals have more than doubled in value in the last year. So to hold the same amount of inventory costs twice as much money, right?
Good point.
And we've had a lot of Americans selling into this market until gold really broke $4,000 an ounce, 4,500. And silver, especially, Americans didn't come into the buying side of the market till silver got to be about $65 or $75 an ounce. So a lot of them were sellers up to that point. and we didn't have follow through buying. So what happened? Dealer inventories build up. We get lower cash flow. We have a little bit less to work with. We sell up to the refineries. The refineries, especially in silver, have been flooded with incoming product that they cannot process fast enough. And they're the ultimate buyers of last resort. So if the product just wants to keep coming in and the price keeps rising, the only way we can mitigate that is to increase our discount under metal price that we buy at. Now, reputable dealers on silver would be, $4 or $5 an ounce under at $100, right? 5% maybe. With gold, it's 1 or 2% for reputable dealers. And there are certainly people that will do lower than that, especially a lot of smaller coin shops who don't have the national trading ability. Where if their cash flows are getting tight, they either have to lower their bid a lot so they can dump the metal, or just stop, and that happens sometimes. So it just depends. Having a relationship with a reputable dealer matters in a market like this. It really does.
Yeah, I've been saying this on X Spaces for weeks now. Like people ask me, hey, I went to my coin shop, and I'm like, coin shop is not a gold and silver broker. They are a coin shop. They will buy your gold, they will buy your silver, but that's not what they do for a living. They're collectors primarily, memorabilia, a focused business. And when I hear people saying, my brother tried to sell it and it's 25 under spot, 25% under spot, I'm like, two things are happening. Number one, you're probably dealing with someone with low morals who's just trying to rip you off, because you can pull it off for 5% max. And number two, you don't have a relationship. Like, relationships are everything in this world. I know 6 or 7 other guys here locally in Dallas. Like, I kind of have to sell to them physically. But when I look around to the market itself, it really does. You bring up a great point. Everything is about relationships, especially when it comes to money. And you need to have that pipeline to people, because I can walk into any of my guys and get 1.5 under spot anytime. I can go right now. I'm not going to, because right now is not the good time to do it. I think we'll see a rebound. But that is a good point. So don't just treat things transactionally. People are people, and people who have these networks, because guys like you have a network that goes all the way to the refiner to the miner, from miner to refiner. That network is what builds in the ability for you to get good pricing when you're buying and get good pricing when you're selling. These are very important things to look at. So people always ask me, where should I buy gold and silver from? I throw your name out. I throw a few other guys' names out if they're looking to buy physically, like on site in Texas. And they'll ask me why. And I say they're licensed and they're bonded and they're refiner to miner. Like, they know everyone from digging it up in the ground to turning it into a coin. And if you don't have that network in there, you're just a coin shop. And there's nothing wrong with being a coin shop. And there's nothing wrong with buying your gold and silver at a coin shop or selling it there. Just understand the way the market works. If you're looking to sell, you've got to find the guys with a pipeline. That's just the way it works. And reaching out to Dana, I think, would be a great idea, because if he can't help you, which I'm sure he can, then he can find somebody locally who can. It's a huge network. People don't realize how interconnected the gold and silver market is. All you guys know each other. I've met all of you guys. So
it's a small world. And I've literally had some people that wanted to sell to us, but logistically it'd be a bit of a challenge to us, that never did business with us before. Let me just put it that way. And I said, where do you live? And so I found a reputable dealer in their area where they could contact and name drop me if they wanted to. And, they all thanked me, because we've literally had a hard time just helping our own clients. Our conference room where we meet people has been booked, from 8:30 in the morning till 6 at night, constantly for 2 weeks in a row, both buying and selling, plus our national telephone business. It's just been nuts. And especially sellers coming in hard when silver got over 100 and gold broke 52, 5,300. But that's the price of admission for us. We're going to lose a little bit of money because we bought some of this a little higher. We're going to sell it at a loss, but let's just keep turning the inventory. That's how we do it. We've made some nice profits on the way up. We give a little bit back at the top like this. It's okay.
So in these meetings you're having, just off, I know you don't. Maybe you have the stats. I'm not gonna belittle you, Dana. You may absolutely have these stats in your head, but I wouldn't have them. Just percentage wise, buyer to seller right now, where does it sit in these meetings?
Well, we were mostly probably 80% sellers to 20% buyers. That flipped more to about 50-50, in the last month. Sellers have ramped up again, especially in silver. Once silver got over 100 in the last couple of weeks, they've been coming out of the woodworks, because people have held silver for 30 or 40 years, some of these people, right? And they just see the chance to get out. And I don't think a lot of people trusted the rally, and this breakdown that we've had in this correction, it's a little bit of validation for them. But I don't see any of the fundamentals that have driven this market to record highs that we're now correcting down from, really changing that much. So I do think we'll get a rebound once we stabilize, because this has been a global run into something that people can trust, away from things that people are having some problems trusting, like the dollar, the debt, whether inflation will come back. And we've just got some inflation stats just 2 days ago that said inflation's, perking back up again. And the 10-year treasury yield is rising. The dollar has taken a tumble. These are inflationary, indices right now, flashing a little bit of yellow caution right now, where they've been, coming down for a while.
Well, that's the one thing that gold has done better than anything else for the last 50 years, is sniffing out inflation ahead of time. I mean, that's literally, like, gold traders are the smartest people at seeing trends. And here's the trend. So we have certainly a bifurcation between reality and government statistics. And I don't think anybody would, like, anybody challenging that, just go back to bed, wake up when this is over. When they're telling us we're at in the twos of inflation, it just doesn't make sense. The way that they advertise, like, people forget that politicians are some of the best marketers in the world. That's literally their job, is to market bad ideas. And I remember in Texas the other day, maybe like 3 weeks ago, somebody's like, look at our gas prices. They're under $2. Well, yeah, they were under $2 at Costco, who happens to be one of the largest contributors to political campaigns in the country. And they were 30 cents underneath everyone else, but they just showed Costco, who obviously lowered their prices to take a screenshot of it and use it as political fodder. Excuse me. And then in that process, I noticed that even Kroger was down at 209. When I moved to Texas in 2020, it was $1.77. So that's kind of my baseline. I remember the day I moved in here from $6 in California to $1.77 in Texas. I will never forget seeing $1.77. Now, it went down to 209 for exactly 12 hours. And the next morning I woke up, it's 238. This morning it's 256. Now, you don't hear about it going from $1.99 back to 256. You just hear about it going to $1.99. It stays in your head, and now you think inflation is low. But the reality is it's now up another 30%. That's gas. Right. When you look at inflation and we look at the moves that we're making, our new selected Fed chair, who, by the way, is in the Epstein files, I kind of got to throw that in there. He is now basically going to come in, and the reason he is being selected is to lower interest rates, which isn't a bad thing. It certainly stimulates the economy. It'll create a massive run in the markets. These are illusory things that are short-lived. But at the same time, that's inflation. People will say, well, you can lower rates without increasing inflation. You certainly can. But Dana, do you remember, you're a little older than I am. Do you ever remember a time, and that's not a bad thing, by the way. Do you ever remember a time in your economic history as an American when we had low rates and we didn't print money?
No. I mean, well, back in the 80s, we had interest rates that were reasonable. That's when I really got my career start, 1980 to 1990. It was more of a normal environment. We started the skew in the mid 90s, and we certainly, got political with the federal funds rate, about 2000, very political. And we've stayed political, both parties, and our debt has just exploded in the last 25 years. From under 5 trillion now to 38. Are we at 39 trillion yet? We got to be close. And that's really why gold and silver have done so well, especially in the last couple of years, is the global debt load just keeps increasing, making the paper.
We're over 300 trillion globally, right?
Like yeah.
322.
I think we're more than that, actually, closer to 350 trillion global debt. And look what happened in Japan just in the last, couple of weeks. They had a failed auction of their treasuries because the government is trying to take a tax away that has been, they've never really had inflation for 10 years in Japan. And they've engineered that by keeping interest rates abnormally low and supplementing the government by printing money and having the Bank of Japan buy the bonds. But they've let the interest rate float. It's come up from, under half a point to over 2.5%. Or 2.34%, sorry. And inflation is rising. So they're trying to take a tax off of food to bring the food costs down. And the people said, well, how are we going to pay for that? and they stopped buying the Japanese bonds. What happens? The yield spiked and bond values plummeted. And we've seen a couple of other instances in the last 5 years when you get a big spike in bond yields and bond values tumble. That means there's distress in the biggest credit markets in the world. We saw an episode in Great Britain in 2022 when the Liz Truss's government tried to lower taxes that they couldn't pay for. They had a bond blowout. And we had a bond blowout in the US when President Trump deployed the liberation taxes April 2nd. That helped drive gold $500 due to Asian buying because we tariffed China 145%. But that also caused when the Fed raised rates from 0 to 4.5% in 2022 and 2023, what happened? Silicon Valley Bank failed and a couple other big banks failed. We had to bail them out for billions of dollars because of a spike in interest rates.
Which was illegal to do, by the way. The Dodd-Frank Act make that illegal to bail out banks, and it happened anyway. So
yeah, they don't care. Then they bailed out some of the richest people in the world. Right? Silicon Valley Titans. And
it's kind of weird how they pulled their money out 24 hours before everybody else, isn't it, Dana? Isn't that it's just kind of weird?
Yeah, they knew.
Total coincidence.
They could smell the trouble coming, and they got away with it. But when we see problems like this, a lack of trust in the biggest credit markets in the world, that helps to increase the allure for precious metals, which is kind of why we got this rally that we got. It was so fast and furious that now, we're having a cool down period, and it's creating a better buying opportunity than I think might have existed just even 3-4 weeks ago. We're back to prices where we were 3-4 weeks ago. And I don't think we've seen the hard tops for the long run yet. I think this is just a stop along the way, and it's going to take some of the froth out of the market and give us a better base to move higher from. We'll move cautiously at first, but the corrections we've seen so far have been fairly shallow. Now, this one wasn't shallow, but they've also been fairly short-lived. Now, this one is a bit more damaging. It's going to take a little bit more time to recover from, but that just means you'll have a chance to buy silver, maybe under $80 or gold under 5,000 for a while until we just move higher still, because our debt's going to keep growing. And if we go into lower interest rates through Kevin Warsh, yeah, you're right. That's inflationary. That'll help to drive metals higher over time. That's almost a lock. One of my friends who's in the business coined this a precious metals washout.
I like that.
Because he's perceived as a hawk, but he can't be a hawk and beat Donald Trump's Fed chair. He can't. He's going to have to lower rates or else he won't be in the job.
Well, one thing we've learned about political positions is that perception is not reality. That should be obvious, and it's clear that our Fed chair is a political figure today.
Yes.
Has it always been that way? Probably. We just didn't notice it as much because the moves weren't as dramatic or drastic. But you brought up a great point. In that conversation, you said something that from a guy who's owned gold and silver for, I don't know, a decade, right? Like, so for a decade, to hear someone say, this is the question I was going to ask you, you led right into it. You said, I think there's going to be tremendous buying opportunities to be able to buy silver under 80 and gold under 5,000. Those numbers just still do not equate in my head from somebody who held, gold from $900 and silver from $11. But it is the new reality. Like, that's the thing I want to get this conversation, turned to is this a buyer's market? Bitcoin, same thing, Epstein paid off developer. It actually doesn't matter to the protocol. And gold, now there's this, fear, stay away from it. It's at all-time highs. And we have such a confusing market right now. And in confusing markets, you go to things that are steady. And in those times of tribulation or turbulence in the market, you look for things that are steady. Gold and silver are steady. Like if you zoom out from the last week, maybe let's not even do that. Let's zoom out, discard the last year. These are steady investments. And they're not beating the stock market, although gold has outperformed the S&P 500 significantly over the past decade. But is this a buying opportunity, and how do you get through the challenge of, gold people or silver people who've owned it and now have tremendous profits in it? Are they still buying? Are they still accumulating, or are they in a waiting pattern? Because I'm in a waiting pattern. I'm not buying gold or silver right now. I'm selling a little bit here and there. But how do you get through that? And how does the does the psyche of that market actually work right now? I'm always curious about that.
Yeah, getting your head around these higher numbers that we've never seen before. It's what do we want to call it? It's a process where you come to terms with the numbers, and you're right. We've never seen these kind of prices before for metals, but I don't think we're going to get a whole lot cheaper. We could get a little bit cheaper still from here. That's very possible. But there's some fundamental shifts that have happened in the last 3 or 4 years that are just very, very bullish for precious metals. For gold, it's been central bank gold buying since we weaponized the dollar against Russia. Central banks have bought over 1,000 tons of gold 2022, 2023, 2024. For 25, they're going to come in at probably about 875 tons. We don't have the final numbers yet, at the highest gold price ever, right? Poland just announced they're going to buy another 150 tons. This is one of the most basic, fundamental buying frenzies we've ever seen amongst the most conservative bankers in the world. Who else is a buyer? Tether. Tether has 140 tons of gold, a cryptocurrency, because they want to help keep the currency stable, and they're using gold as a part of their reserves. And it's only a fraction of their reserves. That's new. In silver, what's happening? A year and a half ago, Samsung announced a prototype battery for EVs that was silver-based, that would charge in 9 minutes and go for 600 miles on a charge. Now, we haven't heard much about the battery since, but guess what? Samsung spent $175 million in a Mexican silver mine in October of last year into November to reopen a mine so they can go directly to the source to supply the silver that they need. They're disintermediating the market. Why didn't just go to the LBMA? Well, the LBMA didn't have enough silver for them. They want a guaranteed supply chain. Why? Because silver is one of the most conductive metals there is for heat and current. And it truly is. It's very hard to replace. What else has happened? The Chinese government has gone to 2 different Canadian mines to try and buy silver in the ground for $7, $8, $9 an ounce over the spot price to secure a supply line. Yeah. Now, if they're trying to do these things, industry and governments are trying to go directly to the mines outside of their own countries to secure supply lines. What does that tell you about the metal and how much above ground supplies there may be and how critical these metals are for their continued success? My iPhone, what does it have in it? $10, $20 worth of silver?
Easily.
Yeah, but if the price goes to $50 worth of silver on the iPhone, is it going to matter to Apple, who makes those phones? I don't think so.
Something's happening with your light. There you go. There you go.
Yeah, they're still going to want the silver to
they need it.
Yeah, they have to have it, right? So if silver's $200 an ounce instead of $80 an ounce, it's not going to matter. They're still going to want to get it, right? And
and I think that's the allure, Dana. I think that I want to talk about gold and silver being completely different use cases. Like people lump them together. Like silver is not money, but gold's not a very good form of money either. It's literally chunky and you got to take it around everywhere. But silver certainly is not money. Silver is an asset. It's an investment that's going to have to be gobbled up. Eventually, for us to have an efficient world, we're going to have to use a majority of the silver that's mined into products. And Samsung, I read the other day, signed a contract for a mine's entire supply for the next 3 years at $100 an ounce.
Yeah, okay. I didn't see that, but that's the La Paria mine in Mexico. That's the one they're working with.
Yeah, right? I mean, these are big numbers. They don't, right. They don't care about the price because, and if what they're saying is true, that you can build an EV battery that charges in 9 minutes, which is still about 7 minutes more than it takes to fill your tank, and goes 600 miles, you actually have an industry out of something that's a joke right now.
Right. No, that's true. And it's the 600 miles, I think, that really makes the difference because, I drive between Austin and Dallas. It's 250 miles, 190 to 240, depending which end of each city you start at. You don't see a lot of Teslas on the highway. Right. You see them around town, but not on a lot of big road trips. Right. But if you can get a battery that can go 600 miles, that's a game changer for a battery that goes 250 or 300 miles, right? It doubles your range. It's amazing.
And you won't have to stop at Buc-ee's for 38 minutes while it fills up and eat a bunch of sandwiches you shouldn't be eating at that time. So
Yeah, I actually like Buc-ee's.
me too. Love it. The first time I went into a Buc-ee's, I spent $365 at a gas station. Like if you haven't been to a Buc-ee's, I think they have them in Florida. They just signed to have them in Florida right now. Florida, you guys are going to go broke the first time you go in there. It's such cool stuff.
Yeah, I always come out with $50 of beef jerky.
Easily, because it's so good. Like why it's one of the best beef jerkies in the country. And you got to get the shredded meat sandwich too. The barbecue sandwich is fantastic.
Yeah,
We're not talking about Buc-ee's though, Dana. We're keeping on track here. Even though Buc-ee's sounds good, it's lunchtime. I haven't eaten. I'm getting hungry. But Dana, let's talk about the difference between the use case or the market use case of gold and silver. I view, and maybe I'm wrong, but I've always viewed gold as a lesser form of money, right? So there's money and there's currency. Money is what will create the value that the currency lends out. And that's what we used to have. We used to have gold as our money, and then the dollar was pegged to gold, and we used the dollar for gold. Now, I think we're going to probably try to go back to that at some point if we have enough gold, because we have no idea how much gold we have in this country. Before I do that, I've always wondered this: how big is a ton of gold? Like, what does a ton of gold look like? How expensive is it to move? And how do you assay a ton of gold, price and time efficiently? How do you do that?
Well, the biggest gold bars are 400-ounce gold bars, and they're not that big considering, they're about, I don't know, about a foot long and about 4 inches square, 5 inches squared, and they're going to weigh about 40 pounds each, right? So they're big and heavy bars. I think the best way I can explain gold to you is not from a ton, but when I first started my career in the 80s, we would say that, all the gold that's ever been mined in the world that remains above ground could fit into an Olympic-sized swimming pool.
Which isn't true.
Well, what do you mean it's not true?
It's not true. Provable by the amount of ounces. I used AI for this analogy.
Oh, you did? Yeah.
Yes, it's not true. There's almost twice as much. You could fill 4 Olympic-sized pools.
Yeah, I thought it was 2. But still, when you think about it,
that's what the old saying was. The old saying was 2, but now there's 4. So more gold and silver appear in the market. It's about a 4.5 to 5% inflationary asset.
Right.
It's fairly scarce. It's not truly scarce, but it's fairly scarce.
What gold really is compact, portable, transferable wealth. That's really what it is, because you can hold, 100 ounces in your pockets easily. And right now that's, $500,000. Right. And
you would definitely get robbed in New York City with that in your pockets, for sure.
Yeah. But you can walk around with 100 ounces of gold in each pocket. Literally, you could have $1 million worth of gold on you and no one would really know. Right. It's only 15 pounds, 16 pounds. Where silver is a commodity metal. It's commodity. It's not a monetary metal like gold. It's a commodity metal. So you're right. They do have 2 entirely different use cases. Gold is used a little bit in electronics and, of course, jewelry. Some dental, but most of it's, for investment or for jewelry. And silver is more of a commodity metal because of its conductivity. But the world is trying to secure supply lines, especially for silver right now. And they're buying gold at record rates. This is the world across, all time zones, all places. And the U.S. is starting to finally get it to a degree as this run has occurred. Now we'll take some of that steam out of the U.S. market right now with this correction, which is actually a good thing.
Yeah,
it was turning into quite a frenzy, and too much too fast. But the correction, I think, is stabilizing now, and I do think we're going to see the metals grind higher once we get, this bout of selling and profit taking done with, which I think is going to be over with pretty quick the way this market's shaping up today.
Well, the dumping is happening so fast right now on the paper market. It's visible to see, and that's actually a good thing for the physical market. It takes pressure off. But there's also this confusing thing about why is an ounce of, and I don't know what it is today, but on Friday an ounce of silver was still $123 in Shanghai while it was $87 in America. Why is there such a huge spread between the two? And is that an economic war plan? Because you brought up sorry to interrupt you, Danny. You brought up a great point. Is that these manufacturers, people think that, if there's no silver available or it's too expensive, these are components. It's not like it's the whole unit or the whole battery is made out of silver. It's not the Silver Surfer from Marvel that they're installing into your car. It's componentry. So if it goes up to $300 an ounce, yeah, it'll be a little more expensive. They'll pass that off to the end consumer. The fact of the matter is they need the silver. And when you're looking at the market as a whole, that is a commodity play. So definitely not, silver is not money. It was money for a long time, but it is not money in the new world, nor is gold, in my opinion. I think all money will go digital. Unfortunately, that's just the way it's going to be. And you have to accept that. That's the world we're getting into. But why is there such a price spread between Chinese prices and American prices if you can't explain it in any other way due to the fact that like if I had 2 tons of silver, I would want to know what it costs because I'd hop on a plane right now and go sell it in Shanghai to make the profit. But that gives the Chinese silver. Will price be used by these product makers? Like they don't care, right? If it's $400, $500 an ounce, they just need the silver. They're going to pay for it, and they get their profit making products. So is this an economic war between China and the U.S. via silver? What are you seeing in that? I want you to get a little conspiratorial, which you're good at off camera, but I don't know if you want to do it on camera.
Well, this is an East-West tug of war to secure supply lines for all the minerals we need. Copper. President Trump just announced today, what, a $1.2 billion U.S. critical mineral reserve that we're going to establish
for all the $12 billion.
Pardon me?
I think it's $12 billion.
12 billion. I might have my numbers wrong because I walked into a frenzy again this morning in the office. I'm looking at the headline, but it's
I don't even want to know what it's like in your office these last few days. I don't even want to know.
Right. It's something we've never done before, though, right? Now, the rare earths really aren't rare minerals. What's rare about them is the ability to process the raw materials into what is usable. Now, China has cornered the market on that to 90 or 93% of the rare earth mineral processing they control. It's a dirty, nasty business, and they don't care if they pollute their ground where we do, which is why we haven't done it here. But now we're going to be forced to do that, right, to secure our supply line. Gold and silver are just part of this much bigger picture, right? Getting supply lines that are established and available. Canada's got a lot of metal in the ground up there. Will they be the 51st state? We'll find out.
They will. We'll talk about that in a minute. Yeah,
I think that's a possibility, actually. And it makes sense in some ways. I'm not sure it makes sense to the Canadians in some ways.
It doesn't make sense to any sovereign people. But, in the end, these plans were drawn up by the Club of Rome, World Economic Forum, the Technate. These plans have been out for at least since the 1940s. And I believe that we're moving towards a multipolar world. And I believe America is trying to take control of its hemisphere, which is what we can control. Yep. We no longer have global power. That is something to admit as Americans, and that's actually a good thing for the world. It'll probably be a great thing for trade, to be honest with you. I think prosperity will come from that. And I think you're right. I think it's unavoidable that, like, Venezuela is not about, freeing the Venezuelan people. All we did was remove the president and his wife, which, by the way, have we ever extracted a leader from a country with their wife before? No, never happened. Very strange situation. Tons of minerals there. From fossil fuels to gold, uranium in some deposits, plus Guyana's right next door. I had a great conversation with oil and gas guys about this the other day. We don't know. I don't claim to know what's happening in the world, but I will assure you that before I die, which hopefully will be a long time from now, I assure you that by that time, there will be new economic zones formed with Greenland, Canada, the United States, perhaps all the way down to Colombia and Venezuela. And 10 kingdoms, it's biblical, right? 10 kingdoms must arise to give their power back to the beast. Like, these things kind of all tie back together. Such an interesting time to be alive. And right now, gold and silver is right in the middle of this thing.
Right. Yeah, no, I think everything you said, I just agree with completely. This is a multipolar world. We are becoming more concerned about what happens in our own backyard, our hemisphere, right? And we are reducing our ability to support the whole world. That's ended, right?
We're broke.
Yeah, even in Europe, right? Exactly. So this all makes sense, and it makes sense to do it with our neighbors, right? And I think that this is just the way the world is going to go. I don't think this is going to change anytime soon, and it's all about securing what you think you're going to need in the future.
I think that's the case, and that should be the case. I don't advocate for any of this stuff. Like, I don't advocate, by the way, I don't believe, I don't think I don't think we should be conquering nations. I mean, that's literally why the world perceivably hates Putin, because they perceive that he is trying to conquer new land. Yet we're doing the same thing. We're not doing it with military yet, or perhaps ever. I don't know. I actually am not on the side of we're entering World War III at all. I actually think that these have been the deals that have been done around the world because the powers that truly run the world, which don't sit in White Houses or in parliaments, that they have determined that this is the direction they want the politicians who are the marketers to market to us to gain acceptance for. That's my view on the world. Whether that's right or wrong, it doesn't matter. It's just my view. But I think that, Dana, when we look at this, I think that we are in such a strange time because gold does have purposes beyond that. I've been in laboratories that use nano gold to deliver drugs. Like, it has tremendous medical benefits, AI and quantum chips that are coming out. 10 to 15% of the needed metals for the conductivity in those chips is gold and silver. We are transitioning to a world where the actual use case, jewelry is a terrible use case. So is gold teeth, terrible use cases. Medical is a great use case.
Right.
And potentially, like, I don't know, like I'm very much on the side that AI is the conquering force that steals all your privacy, which is already happening. It's not even controversial to say that. I also think it'll cast a great delusion over the world, but they'll sell us that we need it. It's the next Cold War. We need to have more surveillance than China on our own people. That is kind of where we're going. So in that Cold War that we find ourselves in, gold and silver now have a whole new use, and for massive amounts of government funding and production for these chips. I think that we're looking at a whole new market for gold and silver in the next 10 years. I think it looks nothing like this 10 years from now. I think that money becomes digital at that juncture, and I think gold becomes a baseline money, not a currency, but a money again. In many instances, I don't know that I'll ever try. Actually, let me rewind that. I'll never trust a government to back my currency with gold that they hold ever. And you never should either. You and I have had so many conversations. We are huge advocates of, if you want to own something, own it, not a piece of paper that says you do. And that is what gold-backed currency is. That is exactly what it is. The redeemability is what made gold-backed currencies useful, because at the time when we were using gold-backed currencies, people would accept gold at the local hardware store. No one does that anymore, and the price moves too much. So what does this world look like to you in the coming decade? Because you're in the whirlwind, probably don't have a whole lot of time to think about it right now, to be frank. But what does the world look like to you in your market in a decade?
Well, I see metal prices have, you, as you said at the top of the show, average 6-8% a year. It's pretty steady, right? The year we've had just this past year, 12, 14, 18 months, has just been exceptional. But I think it's just playing catch up to underinvestment or under demand for a host of reasons, right? But I look at the metals from a value standpoint, and I think the value is going to be perceived higher as time passes. I really think gold should be 5,000 right now, not 4,600, 4,700. I think silver should be $90, $95, not under 80, which is about where it's at right now. That's where I see fair value, the way the market's gone and the way the market's bought it up to this point. You take the top 10% that we just went through and take that froth out, 10% gold, maybe even 20% in silver. And those are the numbers you're going to get from the tops. And I think that's about right. And I just think that we're going to see gold and silver's value relative to other things continue to appreciate at a faster rate, while other things like the dollar decline at a rate that's equal to, or maybe even worse. I'm old school, been around a long time. And seeing a new paradigm shift is a little harder for me to see, but that's what you're describing with chips and the usage for gold and silver going forward. And I hadn't even thought about how it could really affect medical use, but I do think you're right. AI is going to rewrite, how we do medicine. It's already starting to, with AI being able to detect cancers that humans and the machines that humans use don't see, but the patterns that AI sees in some of those testing is incredible for early recognition of some of these problems that we get. And if precious metals help facilitate that, I mean, that's just icing on the cake for me, a guy like me.
Yeah, I think that's a good stance. And I like old school guys. I hang around a bunch of new school all day, and I love the old school mentality, because somewhere in the middle is a reality.
Right.
The new school lives too far in the future. The old school lives too far in the past. And the moment that we're in right now is we don't know. You know, that's people always ask me, Eric, what's going on with this? I'm like, I don't know. Here's my view. Here's the facts and the data behind it. Do with it as you please. My assessment of that is X, and you could look at it and come to Y. We don't know. It's a whole new world. It's so uncomfortable, and I find a lot of beauty in this moment. I think that there's just something comforting about like just release it. Like let's see what happens here. I am thoroughly on the side that we will be in a surveillance state you've never imagined ever before in your life, because that's how AI will be able to detect things early, because you're constantly inputting to it. That's an inevitability. Nothing will stop that from happening. There's no levers or guardrails. I had a great discussion with some folks about this over the weekend. But in the metals market, man, I'm with you. I think gold should be at least 5,000 right now. I think silver maybe 90. I see 85 or 90 based on the flow. It's fair price. If you link them together with the old 16, 17 to 1 ratio, silver would be a heck of a lot higher right now as well. But we've used so much of the silver that ratio doesn't make any sense. It's in everything. Silver is in literally everything right now. And there just simply isn't enough to have that ratio catch up, nor are there markets that are stable enough or strong enough to support that price, because you see what happens. But Dana, I think you're right. I think the when you see something go from $1,500 to $5,600, just imagine gold was Tesla stock and it went from 1,500 to 5,600. You're going to have a ton of people selling off. There's a lot of profit to take.
Right.
The problem is that what are they selling off for?
Right. What are you going to go into? And I've had that conversation with clients that want to sell silver to 100, 105, 110. It's like, where are you going to take the money that you're going to do something that'll do as well for you as this has done and may continue to do so?
You can get a dollar.
Yeah. It's like, if you have a better alternative, then by all means. I mean, I like real estate. You like real estate, right? And
No.
I like oil and gas. You don't like real estate?
I hate real estate.
Sorry.
All my real estate is now Bitcoin. It's liquid. I can take it anywhere in the world and no one can confiscate it from me. Not a judge, nobody.
Well, as I said, I'm old school. I like having rental properties where your tenant pays the note and you earn the tax advantages and the appreciation that the property has and the passive income. That's what I like about it. But I agree with you. Crypto, of course, has rewritten the world as we've known it, right? And it's going to continue to do so. And we are in basically a transition phase right now from a global world that worked together to a bipolar or multipolar world.
Bipolar is a way better saying there, Dana. Bipolar right now is the best example to give of the world. Freudian slip.
Yeah, and we're having a land grab for the things that we need, the critical, minerals and metals of life. That's what this is all about. And it's not over. It's just really ramping up. It just has gone from covert to overt in the last year, right?
Agreed.
Up to that point in time, it was more under the table. Now it's above board and everybody can see it. And that's really what these prices mean. It's like, okay, the cat's out of the bag. We can't hide it anymore. So let's just go for it. And that's really what this has been all about. And I think why we got a little too far too fast.
I agree. Dana, where do you see, I'm going to put you on the spot, which is the one thing you gold guys hate doing, but I'm doing it, man. Where do you see gold in the next 12 months? Where do you see silver in the next 12 months? I'm not going to hold you to it. Like most people will. I don't. It's just a best guess. We have no clue. But where do you see them going? Is it still a good time to buy?
I still think we have higher to go. When we get highs like we've had in this market and then we get a correction back down, it's not too long that time passes until we take those highs out and we have new highs. I think we're looking at gold somewhere between 5,500 and 6,000 a year from now. And I think silver is going to be somewhere between 125, 130 and 150, 160. I think that that's very possible. So I think you could see a 30% appreciation of gold from here and, with silver, a 50% appreciation from here. I don't think those are unrealistic numbers, the way the trend has been. I lose the forest for the trees a little bit because I live in the forest where we're chopping lumber down every day and there's still trees all around us. So Getting a clear objective perspective is a little harder for me, but I do think we just went too far too fast. We're in a correction. I think we're going to base and then we're going to grind higher and then we'll have reason to move higher again in earnest as time passes because the world just wants more and more of these metals. And I don't think the demand is over yet.
Well, I think those, I don't disagree with those. I think those are, I think I can see silver hitting 140, 150 for sure. I can certainly see gold hitting 6,000, hit 5,600 already. I mean, that's not even an outlandish
No,
projection.
no, but
Strange part is those two. Well, Dana, your whole career, what is the old saying? Gold runs when what happens?
well, when gold, I like to say gold climbs the wall of worry,
Yes.
right?
Or when there's blood in the street. That was
When
the old
there's
saying.
blood in the streets. Yeah, there you go. There you go. So we have it. That's the one thing, Eric, that's been weird about this whole run that's been so hot for metals. It's the last time, 3 times we've had a red hot precious metals market. We've had extreme problems in the US, and we haven't had those yet here.
Right.
Economically, geopolitically, a crisis of confidence like we had in the late 70s, COVID, or the great financial crisis. For gold and silver to run so hot without a corresponding economic issue in the US, a recession or a major blow up of some kind or a war, is highly unusual, which is why I think if we get into a situation where we have a problem here in the US, that's when we get another turbocharged market situation. And I think a lot of this has to do with the world thinking that there is a problem like that, but we don't see it because we live in the United States and they're worried about the United States. I really think that that's what a lot of this has been about. And there's just been huge demand in India in particular for precious metals, especially silver, because gold has gotten so expensive. And that's helped to fuel this fire. And I don't think, it's the world's largest country with a precious metals culture. And then right behind them is China. And one thing we haven't even mentioned is the fact that the BRICS came out with their currency, the unit, and they're going to back it 40% by gold, right? Because they need to give it some a trust component and a stability component, because they're going to have the trust in their own currencies otherwise.
They don't trust each other. Well, I don't know why anyone would trust us. It's going to be the same. Ecclesiastes 1:9, right? What has been is what will be, and what has been done is what will be done. There's nothing new under the sun.
Right.
And what's nothing new under the sun? Hold your own gold, hold your own Bitcoin, hold your own stuff, because eventually, as you said, you just said it so eloquently, they're going to have to gain people's trust. Well, now you have to trust a government. Actually, now we know they have the gold, but are they pegging it? Have they assayed it? There's so many questions. Is there gold in Fort Knox? Gold is one of the most mysterious markets out there. No one really knows how much gold there is in the world. We know that we mine it consistently. We know that it's valuable. We know that it's fairly scarce, but we don't actually see where these governments proclaim to have their gold. That could be in an account for Bill Smith, the assistant director to the chairman of the bank. It could be in his name. We have no clue. This whole going back to gold-backed currencies, man. I hope people buy gold. I hope people hold their own gold. I hope that they store it with guys like you. I hope they buy it from guys like you. But man, we are going to be so desperate at some point when our dollar loses a lot of its value that we're going to believe this story, which has been a con job by governments since the existence of gold-backed currency. Literally, there's not a single instance where it doesn't turn out bad. Maybe you reset it and start it over again, knowing it'll end bad. I don't know. I'm not a big fan of that. I actually have become completely disengaged with the political solutions to the world, because none of them work, right? That's why people go to gold and silver. That's literally why they go there, is because a loss of confidence in the existing institutions and systems, which is a prime market. So to me, I look at the gold and silver market, and Bitcoin guys get upset. Oh, the reality is, what people are starting to realize is that governments don't have your best interest in mind. And you can have your best interest in mind by holding your own stuff, by custodying your own assets, or using a qualified custodian for it that's local to you, that you could actually go get it. These things are highly important. Gold screams inflation. Gold screams, I love climbs the wall of worry. I think that's much better than blood in the street. That's a definitely bad term. But Dana, what a great conversation to have with you. Thank you for taking the time here. Sorry I was late here. As you know, I had a little medical issue before this. But man, so refreshing to have this conversation, because I've had gold conversations with people who either own gold and silver and Bitcoin or Bitcoiners lately. And guys, it's the same audience.
Yeah.
Like gold bugs and Bitcoiners are the same thing. One of them's just over 60 and the other one's under 50. Like, that's the only difference between the two. And the reality is, there's a transition period for the next decade where gold and silver are going to have a home. And ultimately, digital scarcity will be what we trade on, while gold is used as a store of value to back it. Like, that's just what I see. I've been wrong a lot. I'm right more than I'm wrong. But man, what a just kooky time, Dana. What a kooky
Yeah.
time to be alive.
Yeah, it's crazy. And you're right. Gold and Bitcoin are basically this, two sides of the same coin. And we have that demarcation line by age, but that's starting to get blurred. We're getting a lot more crossover both ways, which I think is a very good thing to happen because both are here to stay. They both have their uses. I really wish I could, get on a plane and fly to Europe with $1 million worth of gold in my pocket or millions, but you can't. Right.
Nope.
But you can do it with Bitcoin. Right.
That's right.
And I also sleep better at night knowing that I own physical gold and silver.
Absolutely.
Because it's a safety valve for my family and for my future.
Yep. ETFs will buy all the gold, supposedly everything goes to an ETF, man. It's so nice to talk to people who are in the street and dealing with self-custody assets. Thank you, Dana, for joining us here today. Any last words, or how can people find you if they're interested in buying or selling? How can they reach out to you?
Well, thanks for having me, Eric. It's great to talk to you again. Great to see you. Our company's American Gold Exchange. We're located in Austin, Texas. Our website is amergold.com. We have live online.
Duck your head, we can see it.
Yeah, live online, transparent pricing. We're user-friendly. We're consultative in nature. We just try and help people in this sector, whether you're buying or selling. Try and give you good advice, very competitive pricing, and rock-solid service.
I would agree with all of that. I've been a customer. You're in Austin, I'm in Dallas, so it's about a 3.5-hour drive. All the guys in Dallas rave about you guys as well. So it's an interconnected network, a fantastic company, and you guys are consultative. Your people are very knowledgeable in the space and patient with people. Not everyone should own gold. Not everyone should own stocks. You have to make those decisions on your own and see what's best for you and your family. So Dana, thank you so much for joining us here, man. I appreciate it. God bless you. God bless this country, and we'll see you next time on the Rice Report. Have a good one, everybody.